What's up, guys? Welcome to the Crypto Savvy channel. I am Craig, and we are going to be going over the markets as usual. We look at the markets as a whole. We take into account what's happening with the DXY, the Dow Jones, altcoins, everything all comes together and paints a picture for us. We're going to be looking at the bigger time frames going into the smaller time frames. When we're done with Bitcoin, we'll get into the Ethereum, Litecoin, XRP, take a quick look at gold and silver. We've been tracking these markets perfectly, and so far, so good. Everything seems to be playing out. We're going to look at areas to watch. If you're not subscribed to the channel, make sure you scroll down, do that now, tick those notification bells to get you notified when I post new videos. Also, if you would, smash those thumbs up and leave a comment down below. Let me know what you think. By leaving a comment, you'll be entering to win. I'm going to be giving some $200 Prime XBT giveaways where it gives you a bonus $200 that you can just trade with. It's a free account. You can set up an account with it, put the code in. It gives you 200 bucks. Anything you win off that, you get to keep. Obviously, you can't withdraw the 200, but whatever you trade that up to, you get to keep. So make sure you leave your comments down below. Smash those likes and let's get into it. So looking at the pre-markets, the Dow futures are up 76, S&P's up 14, NASDAQ up 57. I'm not sure where it's going to be. The markets may be open by the time this video gets out. This may be a little bit longer than usual. We're going to go into a little more detail. But anyways, let's get into it. So the Dow Jones, I've been showing you guys this formation. Could we see something like this and have a major downturn for the next year or so? Now, that doesn't mean we go straight down today to the lows. This stuff takes time. This is a weekly chart. Each little candle is a whole week on here. So this took time. We could be seeing something like this. Let's zoom in a little bit on the Dow. So this is the falling channel we've been watching. We had a target of 30,700. I'd said if we open and close, we could be looking a little bullish there. Although I don't see this going much higher, as you can see in the RSI. We may make it back up to the center of this, which has been major resistance. Either way, once we drop back down below this and start opening and closing dailies below it, I think the Dow is in major trouble. A lot of people like to watch the S&P and NASDAQ. All in all, the Dow is what I watch because it pretty much tells you the whole story of what everything else is going to do. Also with gold and silver, people think that gold and silver is a hedge. You buy it when the markets drop. The fact is gold and silver also fall when the markets fall. I've showed you guys that in the past. So you got to back test that stuff yourself. Do a little research. Put in some work. You'll be surprised what you can learn. So anyways, if we drop down below this again, below this this falling channel again, and that's around the 30,000 range. We drop below that, and I see the Dow still our target's around 2581. Just like when we broke up here, we had the target of 30,700. Obviously, it took a while to get there, but we got there. I still think that is in the cards, and again, could be much, much worse. But let's take a look at some other things. Get something out of my way here. Sorry about that. So the DXY is coming back up to retest the EMAs right now. We had talked about breaking out of this wedge, come back down, retest. Does look good. This has been our major support and resistance area, the 104. Once this is broken and we get a good bounce off this, my next target's 105. And you know the long-term picture, I'm very bullish on the DXY. I think it's going to go much, 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 much higher. You can look at my previous videos. I don't want to go too far into that, but it is looking very bullish today. Could see a major dump soon, and let me explain. So this is the monthly chart. Remember when we made these 3 red candles in a row and closed the monthly down here? We talked about this being 3 black crows, and that was a top signal, and we had more continuation to the downside. Well, that's what happened. Now, if you look here, looks like we're making another 3 black crows. The monthly hasn't closed yet. Let me get this out of the way here. The monthly has not closed yet, but like here, you could see a little bounce up, but as you guys know, I'm not seeing it going much higher than the 24.5 if we even get the bounce. Let's see where this monthly closes down here. The RSI is closing below the trend line here. You know, a lot of people talk about the weekly's bottom, the weekly's bottom. The charts, the Bitcoin market has matured. The monthly has plenty of room to the downside. As you guys know, I think we're in a bear market with a target of around 3,000 to 7,000 in 2023. I've been saying this for over a year. I still believe this is going to be happening. Now let's take a look at why. So as you guys know, the whole time since Bitcoin has been created, the traditional markets have been in a bull run. Now, Bitcoin has never seen a traditional bear market. Now, I know everybody thinks this is a bear market. This was a bear market. This whole thing was a bull market, in my opinion. These were just minor corrections. And then obviously, I think this is the beginning of the true bear market, which I believe could be ending in 2023. Like I said, my targets are 3,000 to 7,000 range. They've been there forever. I do have a count or a measured move that shows we could get lower. We'll talk about that, but I still believe that's the case. Now, that doesn't mean we're not going to have bounces on the way up and down. As you guys know, this is the .com bubble. I made this comparison chart back on December 2nd, 2020. Got called crazy, and it seems to be playing out beautifully now. As you guys know, I have this counted as a 5-wave structure down. If that was to happen the same. Now, a lot of people don't understand this, say you can't compare them. Yes, you can. A market is based on human emotion. Even the time scale here is perfect. That's why I have the 2023 middle or end of 2023 as the bottom. Obviously, it could happen earlier. But if you look at the top here on the .com bubble, remember all the scammy .coms got washed out in this. And then afterwards, Amazon did rally for 20 years. But it took 10 years to break the all-time high. People are thinking we're just going to see a V-shaped bottom recovery from here. I think that is highly, highly, highly unlikely. I think you'll have plenty of time to buy the bottom after it hits bottom in 2023. If my opinion on that changes before then, I will let you know. But as you can see, we got plenty of dumps here and then rallies to get everybody bullish again, and then just to dump lower, rally, get everybody bullish again, just to dump lower. That's how bear markets work. Right? Emotion is your number one enemy, especially if you're trading. So anyways, this is still what I think. Once this invalidates, I'll let you know. I don't see us going up any higher than the 33. So if it gets up to that 33 range, possibly we'll look at invalidating this. But until then, I'm still looking for these lower lows. Again, here is the weekly chart. So we did not quite, everybody says the weekly's in the low, that's the bottom. Well, could be, but I just don't see it, guys. It did not even touch this trend line for one thing. And again, I showed you on the monthly, we have much lower to go. People are putting way too much significance on this weekly. Again, the market's matured. We have to look at bigger time frames. But anyways, we knew this was bearish up here when we had, obviously, the 3 black crows. But on the weekly, I had showed you the 21, the 13, and the 8 EMA. Once they all crossed the 55, the next candle opened and closed below the 8. That was super bearish. And then we were looking for a break of this. If this wouldn't hold as support, which now it didn't hold as support, obviously. That's the 200 EMA we're looking at here on the weekly, and that's around 26.8. But if this draws out, it could just go sideways for a while. This 200 EMA come turning down. Like I said, 24.5-ish is the highest I see us going, if we even get there. That's a big if, in my opinion, right now. So let's take a look at some other things. This is another macro chart, and I've showed you guys these fib channels for a very long time and said once this breaks, like it broke over here, we come down to test the next one. Once it broke here, we came back up, got a little fake out. But again, that fake out could be 24.5 to the 25,000 range up here before coming down. And our next stop down here, depending on how quick. So if it was to go straight down today, which I'm not saying that's going to happen, but if it was to go straight down this week, would be around 11,200. And, you know, if the longer it takes, the higher this next fib level is. So we'll be keeping an eye on that. Once this fib level breaks, if it breaks, I'll see that get tested as resistance and then come down. And that's what gets us down to that $3,000 to $7,000 range I've been talking about. come down to touch this fib, it's sometime in 23 would be between 6 and 7,000. Probably might get a wick down to touch them other lows. Again, this is the longer term. We'll get into the short term. If you guys are interested in trading, definitely check out Prime XBT. By far my favorite exchange. Like this is the one I'll be giving the $200 bonuses, where you can just, you don't have to put any money in. You can just put the bonus code in. It automatically puts $200 bonus in your account, and you can trade it. And whatever you win off of those, you can actually pull that money out. So you can trade Forex, gold, silver, S&P, Dow Jones, everything all from one exchange. You don't need to make a bunch of different accounts to do a bunch of trades. That don't clump them all together so you can have multiple trades in. Definitely check them out. The link's down below. You can trade up in the contest section right up here for free, and they give you free money to trade with just to get used to the platform. If you're interested in starting to trade, that's a great way to do it. No risk. All right, let's get into it. Oh, you can use my promo code if you are trading on here. It's Savvy50, get you up to a $7,000 bonus. Savvy25 will get you 25% off your fees. I do have tutorials on my YouTube page. Check it out. So this is the daily chart. This is the market structure we've been watching forever here. This has been playing out beautifully. We did get this ABC correction. I was expecting that, and I told you guys back here, look for it to begin in the middle to end of June, and that's when we got our bounce. And I said, watch it. It's going to be a big bull trap. It's going to make everybody bullish, calling for 100K again, and that's exactly what happened, just to come crashing down. And then we had a target. Once we broke right here, this rising broadening wedge, I'm showing you guys this so you know how I get my targets. So those that watch the videos all the way through and start to learn and understand have been doing very well. Those that watch part of it and just don't pay attention usually don't do well because they're not learning anything, right? So this target was the measured move, was just taking this line here from the break, measure the widest point of the wedge to where it broke, and then we were looking for that 24.3, right? That broke. That's why I think this will remain huge, heavy resistance. The next target is looking at this. Where we go from here? Let me put this up. So looking at the break, from the break of this structure on the daily down to the bottom, looking at this as a flagpole, this being the bear flag, which is what we were calling it the whole time, gets us down to that 6,800 level. Now, again, that could be the bottom there, but I think there's a good possibility we go lower. We have to see the path it takes to get there is going to be how. That's what we look for on this channel, is structure, market structure. Now, if we could take it from the peak of this and look at this whole thing as a bull flag and not from the break, I like to go from the break of the trend. But if we looked at this whole thing from top to bottom and then we put it to the bottom of the bear flag, that could get us all the way down to 1,800. I'm not saying that's going to happen. I'm just saying that's a measured move there. As you guys know, my actual target is between that 3,000 and 7,000 range. All right, so let's take a look at some other stuff here. This is the 4 hour. Once we zoom into the 4 hour, you guys know my targets. I've showed how I got them. This first target was just a measured move of the fall through of this rising channel, and we hit that perfectly here. Then we made another bear flag here. So if we take this from the break of the trend right here down to the bottom, and we bring this over to the bear flag break, where everybody else was calling all kinds of other different numbers. We were talking about this back here in June around 30,000. We knew if we broke that, we were going down to that 17.7 and to expect a bounce. Once this 17.7 breaks, now that doesn't mean we can't come up and retest the 24.5 first, but once this 17.7 breaks, our next target is that target from the break over here, break of the trend to where we broke down. Boom, 6,800-ish range. But remember, if that breaks, we could go down to the 3-something. But I don't think this is going to be straight down, guys. I've explained before how these work. Just like you can see on Amazon, you know, get this, maybe test this a few more times, break it, test it for resistance, come back down, bounce around in here for a while, and then we might get a big rally to get everybody bullish again, as high as the 30,000 before continuing down. Again, make sure you subscribe to the channel. We'll be keeping up on this, tracking all markets and watching. All right, so let's look at this. We can invalidate this now. This got invalidated when we broke down below it. So, you know, we could bring this trend line up here now and call this the break, but let's take a look at what's going on. So there's that 24.5 if we are able to get up there, which it's not looking very promising right now. As of right now, this does look like a rising broadening wedge. We drew a trend line off these lows here. If we come back down and test this trend line, depending on how long, if it was a huge drop, which is possible, we could see all the way down in this range for a while. I showed you guys yesterday on my Twitter. If you don't give me a follow on Twitter, make sure you do. It's at CryptoSavvy1. But we were looking at this rising wedge on the 4-hour RSI. We broke it. We came back up, retested the wedge this morning. I told you I put a short in there. I notified you on my Discord, which there's also a link down below, and on Twitter that I'd put another short in right here. And I showed you this yesterday, put this arrow in there, that if we broke this, we were coming down to these levels. That's what's happening now. All right, my first target, let me show you why I got these targets here. So if we take, this could just be a 1, 2, and then we get our 3, we get a 4, and then a 5. Looking at Elliott wave structure. I'm going to get this off of here now so you can see what I'm talking about. So could this be a wave 1, this being a whole wave 2, and then we get a 3 wave down to this range? If so, where would that be? We go from the top up here to the bottom, back to where, if we've topped out here, 13.2 would be our 1.618. So we would expect a bounce there if that was to happen around 13.2. Maybe come back up into the 16.5 range, somewhere in that range, depending. If we get down here, all we would do is, let me show you. What we do if we do get down there would be put a fib retracement level from this top to that 13.2 range. And, you know, depending on where we retrace to, we could retrace to 15.2, which would be the 0.236, could go as high as the 16.5, 17.5, so far and so on. As long as we don't break this low coming back up, we would have one more push to the downside, which could get us pretty low. And that would just make this a 1, 2, 3, 4, 5. But now let's take a look at something else. Let's take a look at if this is just a correction coming back down. We correct one more time and then go up. We still have areas to watch. You just throw the fibs on the low here up to the top, and this will give you your levels around that 19.6, 19.7 is the 0.5 fib, which I would expect us to go at least there. Your golden pocket range is between 19 and 19.2. Most likely you get a bounce there at least, but if this breaks, your next level of support is 18.50. Then you have the 17.5, which was our old low. If this old low breaks, start looking for these lower numbers, guys. 16.4, 14.9, 13.2, 10.6. It goes lower and lower. I don't know what this is doing here. But anyways, as you guys know, like I said, I'm short here. I think we're going to continue down. We may get another little spike up here. That is a possibility. We can draw in these highs here. And let's put this on here. We've broken this structure. So like I said, if we do come up and retag this 22.3 area and come down, either way, I see us coming down to these lower targets, guys. Again, if we do get a crazy rally in the markets, we could get our push up to that 24.5. But as of right now, my opinion is we go down from here. It doesn't have to. We still have, no matter what, this 24.5 to watch up here. All right, Ethereum. This chart is very old. We made these targets up here when we broke this rising wedge. We had 19.19. I told you if we broke, we tested for resistance, which we did. Next stop will be 15.6, which we hit. Came back down, tested it, got rejected, and 680 is still my target down here. As you can see, we are starting to make some hidden bearish divergence, hidden divergence, continuation of the trend. If you look at Litecoin, we're doing the same thing. Higher highs in the RSI, lower highs in the price action, hidden bearish divergence. Every time we see this, we see it continue down. As you guys know, my targets for Litecoin is around 24. Again, if we're in a bit longer term bear market to 2023, could go much, much lower. XRP, same thing. We hit our first target, 29. Well, if you've been following this, we actually made all these targets back here at around 80 cents back in January, which we've hit all of them. Told you if we passed 56 cents. Next stop was 29, which we hit. Of course, we're going to get a bounce there. If you look here, we're making higher highs in the price action, or higher highs in the RSI, lower highs in the price action. Hidden bearish divergence. Hidden divergence is a continuation of the trend. So hidden bearish, continuation of the downtrend. I think we get to these 17-cent ranges. Now, I think it could go much, much lower if Bitcoin really is in a bear market till 2023. So be very careful, very cautious out there, guys. Gold, like I had said, anything below this rising channel, everything else would be bearish. Gold's telling us that our next target for gold is around 1561, unless we can get back inside this channel, which would be over 1860, and get support and continue up. But otherwise, totally looking bearish there, guys. And silver, these charts are over a year old, gold and silver. So we came back down, almost tested our 20. But like I said, I believe we break that 20 and then we go down and around that 15.5, possibly much lower. Thanks a lot, guys, for watching. Don't forget, subscribe to the channel, smash that thumbs up, leave your comments down below to get you entered to win the $200 bonus or $200 tradable account. Thanks again, guys. Have a great day, and I'm out.